I mean, we're not. Yeah.
There's Gilmore right there. Probably move it, sit right here if you want to. Yeah, well, I'm saying before we won't pick it up. I don't know if I appreciate you breaking it.
You are.
Leslie, I told the chair I was going to go. You started out. You didn't got all steel and trim now.
I mean, I use that line sometimes too. They laugh at me as well. I mean, central. Okay, 10 o'clock. Call meeting order. See, we have online, we have Commissioner Marshall, and I just can't read everybody else. So, give the other board members online. And do we have anybody else online?
I should see Commissioner Marshall.
Okay. All right. See a quorum is present, so we are convened. First thing on the agenda is the consideration and adoption of the minutes from the August 5th, September 9th, 2025 meetings. Any discussion? Here and now, can you have a motion to approve the minutes? Motion, second. All those in favor say aye. Aye. Opposed, no. The minutes are adopted. With that, I'll give it to Mr. Hutton for him to present the treasurer's report.
Good morning, Mr. Chair and Commissioners. Today, I want to emphasize one word: consistent. In the most recent quarter, we received $99.2 million in earnings. Our return on investment was 3.46%, which is right in the middle of our projected range. The size of our portfolio has remained steady, holding $11.6 billion in assets. So with that overview, I'd like to turn it over to Stephen Gilmore.
Thank you, Mr. Huffman and Chairman Hudson, board members. I'm Stephen Gilmore, Director of Investment Accounting. So we have some slides to present that provide some highlights from the most recent quarter. Again, with the trend in investment revenues. On that second slide, on a month-by-month basis. Most recent month provided $30.6 million from medium and long-term bonds and $6.2 million from short-term investments. The monthly trends are impacted by interest payment schedule, which vary by month. Slide 3 shows the division of income by types of investments divided between short-term and long-term. Ledger receipted income, which are funds available for immediate expenditure on the rightmost side, shows a total of $99.3 million for the most recent quarter as compared to $99.2 million on an accrual basis. Just what's left are accrual basis totals for income by category, with long-term investments making the greatest contributions to each total. Slide 4 shows the division among assets by book value in percentage terms. The pie chart on slide 4 shows mortgage and other loan-backed securities are close to 56% of the total, mortgage bonds at 18%, short-term investments at 15%, and medium to long-term corporate bonds at approximately 11%. The next slide, slide 5, shows recent totals for investment earnings by quarter and by fiscal year. Investment income has been consistent by quarter, with 99.2 million in net income for the most recent 3-month period, as compared to 99.4 million for the prior quarter.
It's on 3.
We have copies of individually. Slide 5 shows recent totals for investment earnings by quarter and then by fiscal year. Investment income has been consistent by quarter, with 99.2 million in net income for the most recent 3-month period, as compared to 99.4 million the prior quarter. Changes in market values are shown as unrealized gains of 93.7 million for the July through September quarter. 192.9 million in total returns for the quarter represents the addition of positive market value changes to the book value net income figure. Over the past few fiscal years, the trend in book returns has been upward with higher bond interest rates. Slide 6 shows the mix of the portfolio by duration group and credit quality. At the top of the chart, that's the duration mix. The largest investment groupings by duration are in the 1 year or less grouping, and then in that middle grouping, which is between 3 and 6 years. The average duration for the portfolio is 3.6 years. In the middle of the chart, corporate bonds were all considered to be investment grade, with the largest portion being in the A range. The S&P ratings are shown here above Moody's ratings, when both are available. The bottom of that page shows commercial paper by rating, with all of those classified in one of the investment grade categories. Slide 7 has an illustration of the trends in bond yields and in Arkansas portfolio returns. Over recent fiscal years, there has been an upward trend, with a plateau having been reached in the last year. Long-term bonds have risen over the past 4 years, which had allowed maturing bonds to be replaced in the portfolio by higher yielding securities, which has boosted portfolio rates of return over time. Slide 8 shows portfolios by aggregate total, with quarterly income figures below each. Treasury General portfolio, shown on the left, is the primary aggregate in dollar terms. And I'd now like to turn it over to investment managers Steve Pulley and Robert Romanek to discuss the portfolio plans.
Thanks, Steve, and Mr. Chairman, board. As you can see, we have another good quarter of consistent returns. As Steve mentioned, the portfolio for Q1 returned 346, which is in line with the 3.4 to 3.5% benchmark that was set for the quarter. And the portfolio generated over $99 million, which is slightly down year over year. This year is almost a carbon copy of Q1 FY25, in the sense that we were looking for the Fed to cut interest rates, and indeed they did in the fourth quarter of 2024, 3 times for 1%. And then it wasn't until this past September that they cut 25 again in October. So for the total cumulative of 1.5% is what we've had cut thus far. If you look at the slide positioning on 9, we kind of pull this up from time to time. the portfolio positioning is squarely in the neutral zone. And this illustrates the interest rate sensitivity and duration profile just for the long-term portfolio itself is neutral to rate movements. The posture of a portfolio is positioned for favorable performance if rates move lower and decline in the future. The main questions to ask are, is a principal protected if rates move lower? The answer is yes. The other question to ask is our income going to be greatly affected from future interest rate reductions by the Federal Reserve for the remainder of the fiscal year? And the answer is no. We're going to have some reductions. You can see we've had a negative impact quarter over quarter, but I don't think it's going to be significant enough to impact us for our fiscal year. So, as previously mentioned, the income's down a little bit. Robert's going to elaborate a little bit more on the interest rates and economic outlook, but the portfolio is working as intended with good results to prove it. The total size of the portfolio is $11.6 billion. $9.8 billion is the long term. That's the main part we're concerned about. We're talking about 336 is a return on that. That really establishes the base for our returns. We got 1.7 billion in short term, which is returning a 433, and then the money market trust fund that a lot of agencies participate in, that's returning a 441 for the same period of time. So with that, I'll answer any questions that I have. If you got questions on the portfolio.
See any questions?
Okay, I'll pass over to Robert and let him give you the macro and the benchmark coming up the quarter.
Thanks, Steve. Morning, Chair Hudson, Chief Deputy Treasurer Huffman, members of the board. With your consent, I'll be setting the new target rate of book return for the second quarter of fiscal year 26. Since our last state board meeting in August, Federal Reserve Committee members have delivered 2 consecutive 25 basis point interest rate cuts at their scheduled monetary policy meetings in September and October. This brings the cumulative reduction in short-term rates to 150 basis points or 1.5%, as Steve mentioned, since the FOMC resumed their accommodative policy bias last September, moves the Fed funds target range to 3.75 to 4%. Market participants fully anticipated a third interest rate cut at this year's final Fed policy meeting in December. However, in an unusually blunt and surprising move, Chair Powell noticeably pushed back in his public address, stating a December cut was far from a foregone conclusion. The suggestion by Powell of an intermittent pause between meetings highlights the prevailing issues the Fed still faces: a precarious combination of a weakened labor market and sticky elevated inflation. A lack of fundamental data caused by the government shutdown has also hindered the Fed's ability to present updated forward guidance. The Fed's dot plot, or forward projection for short-term borrowing rates, still reflects one more 25 basis point interest rate cut for 2025. The Fed funds futures market also indicates a 64% probability of a December cut. Moving to the portfolio and reinforcing what Steve Pulley just said, the investment team has purchased securities that we believe create a defensive posture and will preserve and provide steady income into a declining interest rate environment. We are encouraged by the portfolio's performance through our first quarter, given the magnitude of the rate decline that has already transpired. We are therefore proposing to leave the target rate of book return unchanged for the October through December period, maintaining a second quarter range of 3.4 to 3.5%. Thank you, Chairman Hudson.
Thank y'all. So at this time, I'll take a motion to set the target rate of book return for the October through December quarterly period, maintaining a range of 3.4% to 3.5%. Do I have such motion? Your second. Motion
Second.
Book rate of return, 3.4 to 3.5. All those in favor say aye. Aye. All those opposed, no. Motion passes. I also motion to, if there's no discussion about the treasury report, we receive that, file that. Is there a motion? Second.
Eric Munson
is now
Made
joining.
second to approve and file the treasurer's report. All those in favor say aye. Aye. All those opposed, no. Motion passes. So we have in the packet a list of the current approved brokers and dealers for the treasurer state. That's for information purposes only. We don't need to approve anything on this. We'll make sure that the members of the board know that it's been provided to them. For that, we'll move to the review of the investment policy changes for the state treasurer investment policy and state treasurer money management trust policies and procedures.
Yes, Chairman Hudson, from time to time, periodically doing a review of investment policy. And recently we had some statutory changes made in the previous legislative sessions. Or some technical matters that will flow through to the investment policy. It allows to clean up some language, simplify some things, and really make it more from a procedural and operational standpoint, a little more functional for us, how we operate with the markets. So I would just say that nothing fundamentally is going to change in how we do our business day to day, but this will help and just clean the policy up a little bit better and make the language a little more current to the way we operate. So if you've got any questions on that, I know you've had a chance to look on it. It looks like a lot, but materially, I don't think it is. But if you've got any questions, please feel free to ask.
It appeared that the changes to both would have some really kind of same set of changes.
Exactly. The money markets, the money management trust, we want that to mirror the investment policy so they're consistent.
All struck me as pretty much non-substantive, but just what they can. Any questions from the members of the board? Seeing none, take a motion to approve both documents. Okay. Motion been made, second. All those in favor say aye. Aye. Opposed, no. Ayes have it. The changes to both policies are approved. With that, I'll turn to the board's regular quarterly motions. As chairman of the State Board of Finance, I make a motion to the board that no funds are available for deposit in the State Board of Finance Certificate of Deposit Program. I need a second. A second. All those in favor say aye. Aye. Opposed, no. Motion is approved. Also, as chairman of the State Board of Finance, I make a motion to the board direct the treasurer of state to purchase warrants for succeeding quarter, October 1st, 2025 through December 31st, 2025, pursuant to Act 1088 of 2013, and to keep reasonable amounts in demand deposit accounts and money markets during the next quarter for the transaction and day-to-day activities of the state. You have a second for the motion. Second by Secretary Biskin. All those in favor say aye. Aye. All those opposed, no. Motion passes. With that, we'll turn to our employee benefits matters. Mr. Walsh.
Good morning. We will start with the Employee Benefits Division section. First thing under that section is the formulary. We will begin with the formulary titled September 2025. The first couple are restructuring due to price changes, decreases within the MAC list. So we're able to add those on at a lower tier. It's actually making sense financially to put those on the formulary at this time. Then we go down to the Live Marley solution. This is towards the tail end of the first page. This one's getting added as the oral solution for pediatric dosing. So that's why you'll see the step through the PA quantity limit. We're just making sure that the appropriate restrictions are on that to just label in for pediatric use. You'll see the next three are HIV medications, the NC3P designation. That just makes sure that we don't run these through the pharmacy formulary, that they actually get run through on the medical formulary. So these are drugs that would be administered in a clinical setting. So it's just the coding to make sure that there's not that duplicative charge from a pharmacy to the clinical setting. The methocarbamol, this one was inadvertently added for a short time, and now we're gonna remove that and just clear this up to make sure that we are covering the 500 milligram tablet as opposed to the 1,000 milligram tablet. This is one of those weird instances where it's actually makes more financial sense to cover the lower dosage because it's about 100 times cheaper to give 2 pills as opposed to 1. Fun things with medicines. The next page, you'll see that we are the Entresto tablet. We're removing that because this drug is going generic and we are covering the generic. We're just removing the brand. The Brinart, the HAE medication, we're handling this, we're moving it to non-covered so that we can really handle on a pill and give tighter control than what we're able to do with the PA. This just gives us a better ability to monitor utilization and control that expensive drug. Then you'll see the next one. This is just reducing the tier due to the price erosion. And the last, we're just adding in the quantity limit to just measure utilization, make sure we're not overutilizing that particular drug. I'm just gonna keep going and cover all the formulary.
Yeah.
All right. Now we're going to the October page. The first one is consolidation of dosage. So we're just adding in the appropriate tiering and specialty for this oral chemotherapy drug. The next two are adding in with the appropriate, sorry, I'm trying to read the notes real quick. This is new to market. We're showing approved efficacy with these particular ones. So that's why we're comfortable going ahead and putting them on. Same thing with the last one on that first page. Going to the second page. Again, new to market, we're comfortable with the efficacy on those. That will come in as the above on a specialty tier. Starting with a Truby, going to the next page. These are not showing appropriate efficacy. We're going to continue to monitor those, but leave those not covered for the time being. I'm not going to say that one right, so I'm not even going to do it. The Chikungunya vaccine virus, it is a vaccine, but this has been suspended by the FDA, so we are going to exclude that one and continue to monitor as that goes through its reviewing process. The Humalogs, we're moving from tier 2 to tier 1 just to keep up with the lowering of cost and improved adherence. Looking at Mounjaro, Ozempic, and the GLP-1s. So as these continue to be studied, it is proven in the conditions of NASH and NASH that these are highly effective and they are more cost effective than the current NASH treatments. So we will be adding the RDX code for GLP-1s for the conditions of NASH and NASH. The last page, we are removing these as we are moving towards biosimilars and moving away from the branded products. Going into the November formulary, the first ones, the two Eliquis, there's a new indication on these. So we are adding these as a tier 2. And it really is for the pediatric utilization in those drugs. The opioid overdose, this is a new formulation and we're adding this as tier 2. Again, we just want to make sure for this particular treatment that we've got all available options available for the counteracting of opioid overdosing. The progesterone, this is just adding on with a tier 2 and a PA. And we're just going to continue to monitor the launches of generics as brand utilization as that expands. Going to the next page, the top 2, we are in, this is more of a contracting work that we're doing and just putting these on similar tiers so where we can still take advantage of rebates. The next 2 are being changed from not covered to added at the specialty tier. And this is really just the age expansion for pediatric patients. You'll see the Otezla. We're adding these on for contracting. We're setting them at that specialty with restrictions. And this is going from twice daily to once daily offerings. The next page, when you're looking these, we are for the transectamic acid tablet for bleeding. We're just reducing that tier because of price reductions. Same thing with the naproxen sodium. The pain medication, the minific acid capsule, we're adding that on again as an alternative to pain medications for the NSAIDs. And this is really kind of targeting adolescents and young adults. We're re-looking at the NSAIDs on the next one, 4 below that. Again, that's just studying that class and moving these particular ones to not covered as we go for more effective drugs out there now. The last 2 on that page, we're removing because the prescription product is being discontinued. This is available over the counter. So I'll pause there. Those are the pharmacy formulary recommendations. Be glad to answer any questions on those before we move to the medical.
Any questions from Mr. Wallace on the pharmacy formulary recommendations? Here, can I take a motion to approve? For a second. Motion made and seconded to approve the pharmacy formulary recommendations. All those in favor say aye. Aye. All those opposed, no. Motion passes. Moving on to medical.
Okay, now the November 2025 medical recommendations. Again, the disclaimer I always use, these are drugs that are administered in a clinical setting and not ones that you can go to your local pharmacy and get. The first, the MVA, we are wanting to add that on. When it says EBRX PA, these are drugs that will have to be reviewed by EBRX and get authorization to use before they are administered. We are seeing approved efficacy with the first one, so that's why we're adding it. The Marilys, this is on an accelerated approval from the FDA, but this would not be the first line therapy. This would be essentially last line for non-small cell lung cancer, non-squamous, non-small cell. You'll see the next list are all excluded at this point. Again, we either have a biosimilar that is already preferred, or we just don't have enough efficacy at this point. On the second page, you'll see this is the top ones are the 25-26 flu vaccines. We're just updating those for the new flu season. Then the meningococcal vaccine, again, we're adding these on for the new vaccine year. The last page for Igrafta, we're excluding this for cosmetic purposes. The RSV, this is being discontinued, so it will no longer be used. It's the discontinued date's December 31st of this year. So anybody that's trying to get it between when this is approved and December the 31st, it will be approved on a review. So they would get an exception to coverage. We're going to cover it. We're just really getting ahead of the curve to make sure once it's discontinued, that it's not on our formulary. And then the last one, we're going to continue to monitor that for more efficacy in how that one works. So with that, that is the medical.
Any questions concerning the medical?
I have a question, Chair Hudson.
Yep, go ahead.
Grant, I'm assuming there are other RSV options that will be covered.
Absolutely.
Thank you.
Any other questions? That answer your question, Commissioner Marshall? All right, not hearing any other questions, I'll take a motion to approve. Okay, there's a second. Been made and seconded. All those in favor say aye. Aye. All those opposed, no. Medical drug formulary list is approved.
Okay, we have one contract for EBD to come before you today. This is for our consultant and actuarial services. The RFP process is concluding, and Public Consulting Group out of Boston was the winner of that RFP. So we have this for you for your review. The initial contract term is for 2 years and is valued at 1.39. The total projected cost, if it were to go out the full 7, is 4.8 million. Be glad to answer any questions.
Any questions? Hearing none, take a motion to approve the contract with Public Consulting Group LLC. Your motion. Motion by Secretary Fiskin, or second? Second. All those in favor say aye. Aye. All those opposed, no. Motion passes and the contract is approved.
Okay, now shifting over to the other side of the business, the Office of Property Risk. And we have one item before you today. This would be the investment policy statement for the captive insurance company. You've had it for a little bit to review. Essentially, the strategy that we used with this is to dip our toe in with working with Stevens Capital, do a base starting point for the investment policy, and let's run out a year and let's see how things are going to go. We went through, worked with DFA and Treasury, went through, scrubbed anything that was prohibited by state law that we wouldn't be allowed to invest in, and are comfortable with where the policy is at this point. Be glad to answer any questions.
So just a quick comment, I guess, for me, I think, to Grant's point, which I completely agree with, I think this first year of running captive, we don't know how much we're really going to throw off on free cash. So the focus needs to be, at least for this first year, on capital preservation, see what our reserve requirements are. I think after we get, frankly, even more than a year in, I think we have some extra cash after we consider more high yielding opportunities. It's not something we should be doing at the moment. So conservative capital preservation, make sure we have cash available to make funding tests. Any questions about the policy? This will be the document that governs Stevens as they make decisions about the investments. Portfolio capital.
Chair, can I
Chair
ask,
Hudson,
will Stevens then, under this policy, pay the entirety of the funds? What's already in general, and what might be in the money market account?
Yeah, I think that's something for us to continue to talk about in terms of what's the most efficient way to manage those. certainly I would like for them to be giving us their thinking about what the appropriate investments, but in terms of just kind of taking it and really having sole control over it, I want to make sure that the team and the treasurer staff as much as possible, as much as y'all want.
So we're not there yet.
Commissioner Marshall, you have a question?
Yes, sir. Mainly just a comment, Chair Hudson. I appreciate your comments that early on, we may not have full utilization or need for a more robust policy, but at some point in time, I think two of the things that really stand out that may be missing to me is on number 8, the asset allocation guidelines, exactly what those are, where it just said they'll be reviewed and adjusted as appropriate. Really having something more substantive we can opine on as to the relevance and the accuracy and appropriateness, as well as any, investment managers or, companies that we may use. Those are good things to have in a policy upon at the onset rather than, after the fact. So just a few comments. Thank you.
Yep, I agree. I do agree. Right now, we're allocated by market.
It has not been transferred into the market account.
So it's,
Yes, it's in the treasury general.
so it's reflecting the allocation of treasury general. Yeah, I think it's a good conversation for us to be having as to whether or not we want to provide specific, asset allocation at this time, or wait, let Stevens come in and give us some recommendations. Talk to the treasurer about, we agree with that, and I think that. Okay. Other discussion? All right, not hearing anything, take a motion to approve the investment policy for the capital. Motion for second. Second. All in favor say aye. Aye. Opposed, no.
Aye.
Ayes have it. The investment policy is approved. Anything else for us to discuss? Ladies and gentlemen, we've cleared the agenda. That will be adjourned. Thank y'all for your attendance. Well, I just. I know what you meant.
Sorry about that. One thing,